In terms of growth, you're looking for the S&P to hit 2,200, about an 8% increase. Are there more risks to the upside or downside to that 8% call?
Great question. I think the risks are relatively even. The upside would be better PEs, which with a rising dollar and falling trade and federal budget deficits is often the case. The downside risks are the blacker holes related to deflation and the dislocation from the price of oil that are upon us now and what's caused the market to have a rough start to 2015.
And even with those oil prices falling, you do not like energy stocks.
Correct. There'll come a time, Rhonda, but my view is that estimate cuts for energy have just begun. The stocks have obviously been hit. They will have nice reflex rallies, but I'd rather play the beneficiaries of lower energy prices, airlines, selected consumer companies, and the like.
And in terms of specific sectors, you're overweight a couple, telecom, technology, healthcare. What are you seeing broadly in those sectors?
Earnings is mainly the story, and prices that are fairly reasonable, technology in particular. Healthcare, the prices have moved up, but the fundamentals remain pretty good. In the first two, telecom is more of a defensive call.
Beyond energy, you do not like utilities, you don't like materials. Is that commodity related? What's the story behind that?
That's exactly right. I think we're at a point where global growth is good but not great, led by the U.S. That's not an environment we're going to have commodity prices moving up a lot. That's what's necessary for energy and material stocks to do well.
You do see the Fed raising interest rates. Of course, that's a broad call. You see about a 25 basis point move midway through the year. How is the market going to react ahead of that? It's a very different Fed than the last time they raised rates. We have a Fed that communicates, and we've had also this unprecedented era in Federal Reserve policy.
Boy, have we ever. It's interesting to watch. I think the Fed is going to over-communicate because they're very nervous that they're going to get it right. And so I think all the headlines and consternation that all of us have placed on the Fed make that communication all the more important. But I think it'll be a yawn when it finally happens, because who isn't expecting the Fed to begin raising rates?
But will that really contribute to stock market volatility? You see volatility picking up this year. Is it from the Fed or would it be from something else?
The pickup in volatility really is from very low volatility, which we think is unsustainable, caused by this massive liquidity from all over the planet, led by the Fed. That's less the case now. Then you layer on top of that the deflation uncertainties around the world, and I think it's just going to create a little more volatility.